one of our clients had a policy non-renewed or canceled after writing it because they had 5 bags of mulch in the driveway.
Yes.
And I was like, well, wouldn't this be like they're taking care of their home? They're doing gardening. Like and I was like, if somebody fell, wouldn't it be better for them to fall on mulch than it would be for them to fall on the concrete? Like, but no, it was like, nope, that's debris in the driveway.
Debris.
And there was no negotiation. And everyone had like their patio furniture was too close to the fire pit. And I was like, so can't they just move it? Like the fire pit wasn't on. It wasn't on. Like somebody could have just been reading a book out there, putting their like feet up on the fire pit just to like relax. And they're like, nope, too close to the fire pit. I'm like, well, we're being ridiculous.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, we're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim?
Yes, Sean.
Who's a good client for PMR?
Property Management Redefined is looking for property owners who value 3 things: accountability, reliability, and a results-driven approach. We want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value because they do it so well is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. We'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Today, Sean, we have another out-of-state guest, an insurance expert, the Chief BFF Officer at Agency Performance Partners. We have Kelly Donahue-Piro. How you doing today, Kelly?
I am doing great. And you know what's funny? You say I'm out of state, but I travel every week. So you never know where I might be.
You never know.
That's a fair point. I did not know that. Thanks for letting me know. So coming out of Warwick, Rhode Island, she is founder and president of insurance consulting and training firm Agency Performance Partners. Kelly has been inspiring clients and conference attendees alike to be ridiculously amazing for more than a decade. An empathetic visionary, Kelly sees herself and her team not just as expert advisors, but as a BFF to agency owners, coming alongside with an arm around the shoulder when times are tough and a round of high fives when success rolls in. Kelly's professional journey began with a degree in relationship marketing from Bentley University in 2003, and she hasn't hit pause since, serving, among other roles, as Vice President of Client Services for an insurance digital marketing firm once named one of America's fastest growing companies by Inc. magazine. Since 2014, she has helmed Agency Performance Partners and traveled the U.S. and Canada as a highly sought after speaker, empowering insurance agents to face change with a can-do attitude and a growth mindset. Her specialties include consulting and coaching on upselling, account rounding, agency culture change, sales scripting, executive level coaching, benchmarking, and agency retention skills. Super impressive.
Did we get it all, Kelly?
Yeah, did we?
It's so awkward to hear your own bio read, by the way. I have to say, it's like...
Hopefully I did a half-decent job.
You did a great job, but when we public speak, it's like you're in the wings and you're like, okay.
Yeah. When are we getting to it?
Here?
Yeah, like that's it, but I get it, and it's... I don't know. I tend to make it more about the clients than about me. So it's always a bit awkward. So if you see me, there you go. You made me blush for the first time in the
Nice.
podcast.
Woohoo!
And also too, Kelly, a lot. So we have insurance and real estate. So there's a lot of people out there, real estate
Absolutely.
involved that, need the better understanding of kind of.
Well, for those real estate friends, I did do a short stint in mortgages. So,
Oh.
All right.
so yes, I can speak that love language. And I started my career in banking, which had
Oh.
All
some
right.
of the real estate side attached. So all of
Okay.
it, it's all an ecosystem.
Yep.
Might have to dive into that. So, all right. So, as I've been hearing from my friend Sean here for almost the last 2 years since we started recording the show, is that the insurance market has shifted. And
In a minor way.
right, very small. And from what I've also
Again.
heard, it's shifted into a hard market. So, with that in mind, how can insurance agencies re-strategize for growth in this hard market?
Well, it's also impacting you guys on the real estate side, right?
It is,
So
yep.
harder to get insurance, harder to qualify. The buildings have to be pristine in nature. So yes, it's impacting the whole ecosystem. So what we're seeing though across the United States is where many markets are starting to shift out of the hard market, very baby steps, right? Not dramatic. Yeah, I will say this: if you're in Georgia, Texas, California, you are still
Battling.
congratulations, you'll be here for another year for different reasons, for each of those states. But we're starting to see promise, like rates are stabilizing. Carrier appetite has gotten a little better, just a teeny tiny tad bit better. So how I would answer this question is, there's three buckets agencies need to focus on as we move out of it. I think everybody's thinking the hard market, party on, like it's going to leave and we can go back to normal. It will not. I'm sad to say this to everybody. The good news is your rates won't go backwards, although Florida auto's starting to go soft. So Florida auto's dropping 9 to 10%. So imagine making 9 to 10% less to do the same amount of work. But we don't predict that in other parts of the country. So a couple of things. One, you need to focus on retaining customers. Because here's what happened in the hard market that you've heard about.
Mm-hmm.
Your clients shopped. When they shopped, they found there was nothing better. It was kind of like stay still, digest the rate. Perfect. The problem is they got all out into these other people's systems. So now when the market shifts, you are silly to think that those companies like State Farm or even other independent agents aren't going to be attacking your customer.
Right.
You're not proactive in contacting them and reaching out and trying to cross-sell them and offer them reviews and potentially proactively with reason remarket to core carriers that are going to have a mutually beneficial relationship, you will start losing. So we always play this rate game in insurance, which is silly. So when the rates stabilize, people will try to relax. And that's actually time you're going to need to put some rocket fuel in the tank and level up.
Wow.
Your book's going to be under attack and there will be market to go to.
Yeah, you know what, Kelly, and I can speak to that firsthand as when the rates were taking the ginormous increases over the last year or two, we didn't get as much activity for clients reaching out to us. We're seeing it now more than ever, where they're saying, "Hey, this went up 10 or 15%. For some reason, I can't explain it. Maybe there's something behind it. But if we're basing it just on an activity level from the customer end, those for us in our agency are up."
Yeah. Well, and I think that the idea is, to me, we have to earn our renewal commission.
Yep.
There's a lot of agencies, oh, that auto renews, or we're so busy. But you're busy on the wrong customers, which leads me to my second point. Agencies need to become efficient and effective.
Mm-hmm.
So we need to have tech savvy teams. We need headsets. We need first call resolution. You need to embrace technology and you need to fire the bottom 10 to 15% of your customers that are draining your resources.
Wow.
That's scary to a lot of people, right?
Mm-hmm.
But you can't, this is how I use it to insurance agencies. My brother sometimes has insurance. Okay. Maybe we all have a brother out there like that, or at least a second cousin.
Yeah.
Right. Sometimes I have it. Sometimes I don't.
But yeah. So I say he has half a policy, right? Half a policy. But I have 28 policies between commercial, life, personal. So 28. So in theory, in an agency, I should get 28 units of service every year.
Yeah.
My brother should get half. But do you know who eats up my service?
Half.
My brother. Because you're going to tell him to pay, remind him to pay. He's going to call
Right.
scrambling because he doesn't have insurance.
Yeah. They're
And
more
you're going to
work.
go, I need to go do it. You're going to go back and forth. My mom's going to end up paying. It's going to be absolute freaking chaos for somebody who's going to lapse and cancel again or get into an accident with a 20-year-old vehicle and stomp to all high heaven when you total his car.
Right. I think what I find so interesting about just your comment on retention as like advice in this market is that kind of like the underlying foundation of our podcast has been built on relationships in business. And the relationships in business, they also come from the relationships in your life. If you live your life in a good way where you value friends and family and neighbors and parents at your kids' school and coaches on your kids' team or whatever, other dog owners, other cat owners, like you just look at it differently. And I think retention is probably not what a lot of people are thinking right now if their insurance business is really hurting it. Like this happens in real estate too. When real estate slowed down 2 years ago, when the interest rates went up and prices were too high, this happened all across the country.
Yeah.
Sales went down 30%. So what I started preaching, especially through the show, is like, take care of the people you know, not the people you don't know, because the people you know need you now more than ever. They need to understand that the value of their home is okay, or like the sky's not falling down, or would you like to fix up your bathroom and increase the value of your asset in this down market? Whatever it is, you're just helping them. And that retention is really what shores your business up for when it does go back the other way. And everyone's still right there and you were with them through the hard times. So I think that's fantastic advice.
Well, it is. But here's the other problem that you have a little bit in insurance. We have a very burned out team.
Yeah.
They're crispy. Like if you look at them, they might disintegrate into ash in front of you.
Yes, crispy.
Don't touch the shoulder.
Do not touch the shoulder. Like, because, service people are sweethearts. They want to love people. They want to help them. And there has been no way to help. You have to have a lot of difficult conversations. So like we even swapped some salespeople in insurance agencies to the save team and saying, you're going to be now incentivized to save cancellations. Because the service team, if I came and said, hey, you know what? I've saved $200 in my insurance. You guys have been great, but $200, they'll be like, I understand. $200 is a lot of money. That makes sense. Let me get you over to State Farm.
Right.
Because they're like, oh, I tried, but they're saving money. Like,
Yeah.
so you have these very crispy people because they're having these hard conversations day after day after day. And it's so far out of their personality zone where they just want to love people and help them get an auto ID card and take their payment and be happy. And now we've just completely like turned them into a prison gang of like, if I get arrested, I'm going to join the personal lines account manager gang in prison because they will shank you. Like
they got cut off jean jackets with big patches on the back.
Together and they are like, yeah, no. And that's because their battery's so low. So we also, I think, as part of that being, figuring out retention is we have to figure out how to rebuild them, rebuild their confidence, rebuild their skills, rebuild, what is the right thing to do because they've just been, mopped up for the past few years. A lot of them are working moms, so they homeschooled their kid and then all of a sudden they went into a hard market and there was not 10 minutes in between all of this. So we have a team that really does need to be built back up. And I think leadership is going to become so critical, which is why I believe we have to become this efficient and effective agency. And there's about 12 things you can do to be efficient. And I think a lot of agencies never pay attention to this focus. So everybody says, we need more people, we need more people. But when you look at the industry average, you're overstaffed, but still backlogged. So there's a gap in there about 12 things that, you can utilize, whether it's your processes are bloated, you're not using technology. But if you want to become efficient, because you're going to have to defend your customers, and that leads me to 3, which is there's going to be more shopping in the marketplace too. So if I can defend and I have enough bandwidth to sell, which means you need a good sales process, you need to have high standards, you need to have a repeatable sales process in insurance that you can whip quick and get them sold and cross-sold and, not just sell monoline. Like a lot of agencies have a quoting process. They don't have a sales experience. So if you can rack your sales experience, you can be efficient and you can rack retention, you can put rocket fuel into your agency over the next couple of years. if you are still churning, like you're losing one and selling one, you're circling the drain. And that's because you don't have a strategy. You're sort of just trying your best every day with the tools that you have.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. Interesting. All right, so here's another question for you. So we're talking about how the market has shifted. Employees are crispy, customer service. So
Yeah, crispy.
why do you, like, in your own eyes, like, what are some of the main reasons why the market has shifted to where it is today? I mean, this guy talks about it all the time. I'd love to hear your perspective.
I'll tell you my favorite. I mean, I'm sure he's said a million ones. Like, my favorite, the way it was explained to me, and it made so much sense to me is, I mean, there's obviously several components, but one of them is, I don't know about your grandparents, but my grandparents had like this incredible sense of pride of paying off their mortgage, right? Like my dad and his two brothers grew up in like a 900 square foot house with a mom, a dad, and three boys.
Right. Yeah.
Right. And
Chaos.
That's like a turf war.
Yeah, my grandfather got out of the military, saved up every penny, purchased a house. They lived in the same house, right? Like even when my grandmother had to be moved into a nursing home or assisted living, it was like, well, what about the house? And it's like,
right.
Grandma, this house is like, there's like crooked floors, like you're going to fall. There's stairs everywhere. It's like an old house, right?
Yeah.
Well, that was the way things worked. Today, things are so different. People don't stay, there's not the same pride of owning your house outright, right? Like there is not the same maintenance budget for houses. So if you ask your friends, how old's your roof? How many of them do you think know?
Probably none.
Zero.
They wait until the roof leaks and then says, I need a new roof, right?
Yep.
And, you take the advent of social media or you're, texting your friends, look at my new kitchen, my granite countertops. And instead, maybe the next budget goes into the new bathroom with marble versus the new roof.
Yeah.
So economics have shifted. Or if you're planning on like, hey, we need to get into the school system because our child has to go to the best school system.
Right.
We're going to sell our house and we're not going to do all this maintenance to it because we're going to sell it and come to the top of our budget in a new house that also might have a 17-year-old roof. And we're not thinking about the $30,000 that needs to get spent on it.
Yep.
So insurance turned into home maintenance policies in a large.
Oh, wow. Wow. Interesting.
And, that became where, like, think about it. Your grandparents, it's time to do the windows.
Yeah.
These windows last,
true.
20 years and it is year 19.
No, you're so right. Like in my industry, so I'm also part of a development
But you
team.
love it when people put the granite countertops in, which is not fair.
Oh,
Absolutely.
yeah.
I get to say stone countertops in the MLS description.
Yeah.
But no, it's funny you say this. So like, I help clients buy, sell, rent, lease real estate, invest, but we invest ourselves. We have a development team. So we flip homes, we hold some homes, and we've reimagined some buildings. And I've taken either first-time home buyers or our own development team through these old properties in Philadelphia. And it's like, it's had the same owner for like 30, 40 years. And I'm like, let's start in the basement. And we start in the basement. I'm like, look, the electrical panel has been replaced. Look at the wires coming out. They look good. Or like they redid the floor, or they parged the walls, or like the HVAC system is only 5 years old, or I'm going to all the rooms. So look, the windows are new here. Like, and the roof has been coated again. It's a row home. It's got a rubber roof. It's only 5 years old. Like today's buyer doesn't see that. What they see is does it have a nice kitchen? Does it have a nice...
I like the floor color.
Exactly. It's all about taste and style. And I say it all the time. I'm like, almost like a grandfather special. Those are the homes you want because they took care of the things that mattered to the home, not the tiny little details that matter. Like the appliances are still green because they work And they're like, why would we get rid of them? Like, we clean
Yeah, like,
them.
unlike the ones say where it's like you get like 6-7 years.
Yeah.
and then
Yeah. Oh, now
you
you pay 10 times what they paid, and then it falls apart in 2 years. That's unbelievable. It's very interesting that you said
No,
that point.
that's a big piece of it, right? And then you the other piece that is just true is society has changed, right? So when there's a hailstorm, there's 700 roofing contractors saying, "Oh, that's damage. We're going to get you a new roof,"
Mhm.
and they encourage claims, right?
Right.
Or everybody gets into a car accident and wants to sue for 10 grand of pain and suffering. Well, somebody pays for that at some point.
Right.
It's not, they settle it because economically it's less expensive, but we all pay for that. So there's a lot of reasons why the hard market hit. To me, also the carriers had a little hand in it of their underwriting guidelines were too loose. They allowed it too. This was no different than the mortgage situation in 2008.
Yep.
Lending allowed it. Wall Street wanted it. All of it got created, and then it became, the slap across the face. You couldn't operate that way any longer. There's a lot of reasons, but I also tell everybody, whether it's mortgage, real estate, insurance, our job as leaders is to strategize. We are here to solve problems. You're not going to be handed the same market every single day.
Mhm.
So you have to get out of your own way and say, what's the game plan? You're the coach, you're the leader. You have to tell your team the plan.
Well, it's very important. And going back to your previous point, Kelly, about the crispy employee, I got to go a little further than that because
Are you envisioning one right now?
Yeah.
Like...
Well, here, let me give you this scenario. The other day, and this is a microcosm of what's going on. We had a renewal account. They did a renewal inspection. They went out, took a photo, did the inspection, turn it back. Hey, you need to remove this tree from the house. It's leaning on the house. Pull it up, send it to the client. Client says, that's not my house.
Whoa.
I said, okay, but in the report here, I see your address on the thing. He goes, that's the same number, but that's not my house. Pull it up. I pull it up on Google. That's not the house.
Oh.
Send it back to underwriter. It's not the house. Can you delete this note from the tree? It's not his property, not his tree. Yeah. No, I can't do that because the inspection company found that this tree is there.
Oh, wow.
Right, but they did it wrong.
No, they did it wrong, right?
So no one's going to accept blame.
Hold that. So I go, oh man, to your point, Kelly, we have to be problem solvers. I say, all right, let me find this house. As the internet sleuth that I am,
You are.
I found the house.
Which, by the way, like anybody could have done, like just a quick.
Yeah.
Well,
It's called Google Maps.
No.
Street View.
No. It was the same number, but it didn't have the street.
Oh.
There was no way to identify the house with this.
Okay.
So I had to like search through the whole like.
You did advanced ninja skills.
Yeah.
I had to go the whole town.
He is a ninja.
Find these. So then I send this back. Say, hey, found the house. It's not the house. The house is over here. Can you rescind the notice from underwriting? Crickets. This is going back and forth with the underwriting. The next day, notice of non-renewal comes out. This was yesterday. I sent to my underwriter, and I'm like,
whoa,
what are we doing here? Now my client thinks that we're idiots, right? Because they inspected the wrong house. Now he's getting a letter of non-renewal because of the person who did that. They paid the person, the carrier paid the person to go inspect the house. They inspect the wrong house. Now the client's going to get a letter from his insurance company saying, we're not renewing your house because of that tree.
Oh my God.
It's not my tree.
Right.
This is what's going on. I mean, I could give you 1,000 of these scenarios. When you say our employees are crispy, it's because of this.
Yeah.
It's because they have to navigate these scenarios, and every day it's a new scenario. And you're like, what?
Well, it's also like making your job like harder. It's it's the drone inspection.
Yes.
All of it. It's like we had, at the hard market, the height of it, we had one of our clients had a policy non-renewed or canceled after writing it because they had 5 bags of mulch in the driveway.
Yes.
And I was like,
What?
well, wouldn't this be like they're taking care of their home? They're doing gardening.
Yeah.
Like and I was like, if somebody fell, wouldn't it be better for them to fall on mulch than it would be for them to fall on the concrete? Like, But no, it was like, nope, that's debris in the driveway.
Debris.
And there was no negotiation.
Yes.
And everyone had like their patio furniture was too close to the fire pit. And I was like, so can't they just
Yeah.
move it? Like the
Not
fire pit
renewal.
wasn't on. It wasn't on. Like somebody
No.
could have just been reading a book out there, putting their like feet up on the fire pit just to like relax. And they're like, nope, too close to the fire pit. I'm like,
so
well, now we're being
these are,
ridiculous.
so yes, we have rate. Yes, we
Yeah.
have eligibility issues that we're dealing with. But then it's like these mini grenades get lobbed into our laps every single day. And our employees are like, oh my God, I can't take it anymore. Like, this is like driving me bananas.
And you
But then on
think
top of it all, you add in that at one point in time, the underwriters would get back to you like in a reasonable amount of time. Now you lob that over and it's 3, 4, 5
out of
days.
office, or they're not with the carrier. I said to a carrier the other day, I said, I don't know how you guys do it. I said, it's like trying to straighten the chairs on the deck of the Titanic, because I literally talk to a different underwriter like every month. Every month, it's like, no, this person's now your underwriter, and then this person. So you don't have a rapport, you don't have a relationship with your underwriter anymore. That's gone. So
They don't want that any longer.
Do you think this is? I mean, is a lot of this stemming from the fact that the business is hard right now, the industry is hard, profits are down, so they're cutting staff, or people are just burnt out and they're missing? Like, what is causing all that?
It's a couple-fold. One, the underwriters, the encouragement before was build relationships with your agencies, right? So then all these new rules came down. When people are involved in making decisions, we are influenced by humanity, right? So they had to write letter. They had to write letter of the law. And that was their directive. So before it was growth, grow, develop, work hard to try to get it done. Now it's like literally the music died and it was like a screeching halt, right? So you have this underwriting shift where they had to start telling people no. And people are prone to make exceptions. So they would like to stop and just go. And the big problem was there was no reinsurance available. Like reinsurance dried. So they're on the hook personally for all these, which is why they stopped. So when reinsurance, we like to say America was like the drunk driver that they were trying to insure. Like we had all these storms. It was wild. We had all these competing factors. So reinsurance is like peace.
Right. Yeah.
I'm
We don't
not
need this.
backing you up.
Yeah.
No, you guys let it go too wild. So now these insurance, they have to be on the hook in order for them to keep their rating, because carriers would get downgraded during this too. So in order to keep your rating, you had to go write letter of the law. So they are more inclined to load them up so people can't have these one-on-one, please just do me a favor, please just do me a favor.
Gotcha.
The other half is you have a lot of people just getting out of the business, right? Again, silver tsunami, a lot of people retiring out. So your veteran underwriters, they were like, I'm out during COVID. I can just hang out with my grandkids. I don't need this. Bye.
Right.
So there's a staffing gap for sure. And, they're going to try to use AI. Like if you are running these big companies privately backed, they're going to try to use AI to do underwriting. So I think we're probably up against this in a lot of industries, right? I'm sure you see it in the lending side too, right? They're going to use AI to help underwrite mortgages. They're not just going to go on your handwritten application so much anymore.
Correct.
Well, in addition to that, Kelly, I think that it's there's been no time in history recently where people leave and there's no tenure with employers anymore.
Correct. Yep.
Right? It's like I go make more money here. Boom, I'm out. Right? So
and the recruiters are fierce too.
yeah, that's fuel on the fire as to like go over here, go make more money.
Yep.
Well, and another thing that happened, we dealt with some carriers like, COVID hits, everybody works from home, but this causes some challenges. I'm sure you experience, like underwriters don't pick up the phone.
Yeah.
They don't email you. They email you back. They won't call you.
Yeah.
So like the underwriters were kind of like hiding out because they were so short staffed. The carriers couldn't really hold them accountable to service standards either. So some carriers were like, hey, we need to call people back in the office. Like this is getting untenable of a situation. And so then the underwriters that really liked working from home, staying incognito, the recruiters would find them another work from home underwriting job.
Yeah. And that's leverage. It's like, well, give me this or I'm going. Huh?
Correct.
Yeah.
Correct. I mean, we had a whole carrier where I had to help them write a policy on acceptable athletic leisure wear to return to the office, because one of the things that all the staff was upset about was having to put pants back on again.
That's real.
And I was like, okay,
You're like, as
yeah.
opposed
So
to
we had to
what?
come up with what
Basketball
is
shorts?
acceptable. Like, if that's your biggest challenge, like, who comes into the office? Like, I'm not, dress code aside. I think you dress for however you feel comfortable. But if you're in a professional environment, you might need to put pants with a button on.
Yep.
But if that's what's going to get everybody to come back to the office and serve the agencies a little bit better,
Right.
we will talk about appropriate joggers.
We'll talk about elastic if that's what makes sense to you.
That's where we've come to.
All right, so here's a question. So we asked, pick one of 3 topics. Our 3 topics are email marketing, hiring and staffing, or routine. You picked routine. So my question is, how does your routine lead to success in business?
So this is funny because a couple of months ago I posted on social media like my morning routine, and
Okay.
we're hiring for new candidates, and people are like, "I checked out your morning routine posts," because I got like a little traction in there.
Yeah.
So I am a huge believer of how you start your day leads to everything else.
As am I.
Yeah, and mine is always get some shocks, but I wake up at 3:45 every morning. Even on the
Whoa,
weekend.
that's the earliest I've ever heard. So super impressive.
Yeah, I do it pretty consistently on the weekends. Every now and again, I take a weekend off if like I've been traveling a lot and I need to catch up on sleep. But
hmm
I just like the morning to be quiet. I don't
hmm
like to rush. So get up, do some things, get on the Peloton, work out, take a shower, and then I always read a chapter of a book.
Wow.
I'm hydrated. I have a half a gallon of water in me at this point in time. I can get a jump start on the day. I plan my day. I look at my priorities. I set my goals, do everything. And then I usually try to get going on a project at like 7 a.m. because we start
Wow.
client meetings, sometimes 8 o'clock,
Uh-huh.
sometimes 9 o'clock. So it gives me a couple of runway while I'm fresh and clear. But at the end of the day, it makes me go to bed early, so I'm not in trouble.
Yeah. Stay off the streets.
Like
Yeah.
I just try really hard because for me, I just feel like I was given all these gifts and I need to hit my potential. And there's a lot of agencies that, we want to grow. We want to be all professional services for independent agencies. And so if every year we grow 20, 25%, that's break pace growth, right? You break a lot of stuff when you grow 20% every year.
Yeah.
You have to hire a lot of people. You have to redo your processes.
Correct.
Like they need the best of me. And that just tends to keep me in alignment with what's best. So people always look at me like, oh my gosh. I'm like, it's not for you. That's totally cool. I don't try to push my morning routine on everybody. But if I don't do it, I definitely don't feel right for the day.
Yeah. I am very similar to you. I'm a big routine guy. I get up usually around 5 o'clock. So you
Mhm.
say 3:45. More power to you. That's crazy. But getting up at 5, same deal, like exercise and getting breakfast going. I guess I'm probably similar like you. I like my mind to be quiet in the morning and focus a little bit more on like slowly getting myself like you said, hydrated, moving, fed, caffeinated, like doing these things that slowly get you out of that I'm a very deep sleeper. I always have been. And
Congratulations.
yeah, thank you. I appreciate that. I'm very blessed. And by the time my almost 7-year-old daughter gets up, I'm like, boom, ready to go. I can take her to school 5 days a week. And same as you, as soon as I get back, usually around like 8 o'clock, I get after it. And
Yeah.
I think that's great that you shared that because there are so many people out there who don't like the mornings. And here's what I encourage you. Have a nighttime
Yeah,
routine.
I agree with that too.
Because if you don't like the mornings, then you probably like the night. So if you like the night, find a way to get yourself where you want to be before you go to bed.
I also just think that I mean, I don't have children, but I do fly every week. So like there's an inconsistency of like time zones and flights. And sometimes like I have to keep something consistent. But I do think as adults with kids, like you have to find a way to have time just for yourself.
Yep. It's hard.
Like, and it is hard. And it's but whether that's at night where you kind of just shut it down and the kids are asleep. But then I also think how you use that time is so critical, right? Like if you're going to use it to watch The Bachelor, fine, if that's your way of doing it. But maybe if you instead worked out or took a walk or read a book, like go farther faster. But like that whole idea of doom scrolling, you know, like people just sit and
Mhm.
like look at Instagram. I always just think like, if I wasn't in business, I've often considered just ditching social media, like
Right.
getting out of it, right? But it's a little hard. So now I'm like just very intentional, like, and even after like 5 minutes, I'm like, okay,
Right,
like,
right.
I don't know, I just have other things to do. I'd rather be sleeping and resting than just like doing this. So,
Right.
but it's very easy for everybody to steal your time if you don't have an intention for it and you don't have boundaries on it too.
That's really great advice. Biggest struggle is also another question we ask. Your biggest struggle you put was resistance to change.
Mm.
More specifically, like agencies not managing by performance and the difficulty getting clear metrics. Why has that specifically been a struggle for you?
All right. So, you go into agencies and there's they're small businesses. So small businesses tend to be run a little differently than corporations, right, wrong, or indifferent. But what we find in a lot of agencies when they sign up with us, they're successful, they're growing, they can afford to have someone come in and work with their team,
Mhm.
right? This is a certain size agency. But what you find is everybody's doing their own thing. Everyone's busy.
Right.
I'm like, okay, how much did we sell last month? We sold some stuff. Okay, how much did we retain? It was good. And then I'm like, okay. So then we have a 4-person data analytics team, right? So they start pulling the data and they do dashboards for our clients every week. And I'm like, okay, well, this is a hot mess. So like you sort of start growing and then all of a sudden like the water gets hotter and hotter and hotter. So now we have to come in and like these are unruly teenagers who everybody's been able to do whatever they want. There's been no goal, no target. If you cry, somebody will give you a raise. If you threaten to quit, somebody's going to give you a raise. Or the owner's super generous and everybody has everything, right? Like you get to leave early on Friday and you get bonuses and you get this and you get that and you get a
Mhm.
car. And it's like, okay, everybody's so generous, but nobody's performing.
Mhm.
And maybe they are performing, but there's no clarity on it. So you come in and then you have to confront what I call the Bev. So the first person I worked with in insurance, her name was Bev, and she didn't trust computers. So we had to document in 3 places.
Paper file, notebook.
Carbon paper.
Ooh, old
Yeah.
school. Where you
And the
tear
glowing box.
where you
We had to
tear
put it in
off
the glowing
the
box.
you tear off the dots on the side just to get the 3 copies.
Wait,
Right.
carbon,
And
glowing
carbon.
box.
Yeah.
What was the third?
She had her own one that she collected every day.
Oh,
whoa.
So
Bev. All
yo,
right.
yo, I'd like to get a beer with Bev.
Yeah.
yeah, Bev was a tough cookie, but so like Bev isn't gonna change her ways. Like, so we come in and we're like, we need a procedure. What's our endorsement process? What's our new business process? So then we put it in and they don't want to do it. They don't want to do first call resolution. They don't want to do anything. So we have to evoke change from both the perspective. The leaders have to start actually managing people for performance and adherence to strategy. And not let everybody do what they want. So you can imagine that this is very challenging if you've been loyal to a company for 20, 25 years. And now we need to shift gears to have a procedure, right? So everybody's documenting and doing things accurately that they're like, oh, that's for new people. I'm like, no, it's for everybody.
Kelly, I imagine you come in like you're the Wicked Witch of the West.
Yo,
Like,
when are you going to Mooney Insurance Brokers and raising hell?
I mean, it's been like I've been equated to like Jillian Michaels,
Yeah.
the bar rescue guy, John Tett.
Yeah.
I've been equated to Gordon
Taffer.
Ramsay, yeah.
But they must hate you. Like these employees must be like cringing when you're like the Grim Reaper walking through the
we
door.
have a process. We have a process. So the first thing is we listen to them and we solve some really silly challenges, right?
Yeah.
Like,
Yeah.
okay, who do you report to? So we start doing that. Like,
Yeah.
Right. Give me the easy. What are the layups? What are the softballs?
Bev,
we
Bev
also
reports to
install-
Bev.
Yeah. We also install our bonus plan. So they're like, ooh, we get more money. Yeah, you get more
All
money.
right.
We have
Yeah.
a bonus plan. You can see
Yeah.
it every week because it's, accumulating based on book growth.
Yeah.
And then we're kind of funny to them. Like we listen, we're like bond with them and we paint the why, right? And you listen, 80% of the staff starts doing it, even if it takes a little while, right? Like they're trying. And the thing I say to agency owners, I say, okay, we know that your team's been doing this a long way. It's going to take some time, but when would this become insubordination? Right? So
Yeah.
Tough one.
there's a line, right?
Yeah.
Like, because people who are trying are not insubordinate, but tell me how long until we've given them the tools, we've met
Correct.
with them, we've trained them, I've sat at their desk, like we have given everything under the sun. They're just not doing this. And I remind agency owners, I'm not asking Bev to stand outside in a chicken costume with a sign that says buy
Right.
insurance from us.
Right.
I'm asking
Not
them to
yet.
document our system so everybody knows what's happening on the account, which is like E&O 101, right? So I'm not asking like for radical change up front. I'm asking for some pretty baseline things.
Right.
Minor
And then they all look at
modification.
me. Yeah, they all look at me like, insubordination. When would it be insubordination?
Well,
And
do you
they're
know what
like,
it
"What do you-"
is? Do you know what I feel like you're getting at? My interpretation of all that is accountability. It's like, when does your fuse run out on accountability? Like, does Bev have 3 months to attempt to change a 30-year-old habit, let's say? Or does she have 3 years? Or is there no, you're just going to deal with Bev and say Bev is Bev, so I'm just going to roll with that? But I think what's interesting about your approach and how you're doing it, one, I feel like you're coming in and you're being relatable. You're asking questions. Like, everyone wants people to ask them questions because people love to talk. So if you're like, hey, tell me about how long have you been here, and like, how's your day going, and what do you like to do for lunch? Maybe we'll go out there.
So busy.
Yeah. Oh God, I'm just so blah blah. But it's like, I think being relatable is a great way to start, knowing that you're driving toward accountability. Like, your client is the agency owner, and the agency owner is struggling to keep all these people accountable. And you're like slapping the agency owner. You're like, look, you're either cool with Bev or you're not cool with Bev.
Or
And
we
if you're
need to
not,
move Bev into a different role.
Yeah,
Maybe she's
exactly.
a senior, but to really grow and to get scale and to get where you want everything to work frictionless, right? You have to
Yep.
have some of these conversations, and they're just a little overdue, right? Sometimes because agencies just grew through acquisitions, everything happened so fast. Sometimes it was the hard market and COVID, so we lost control a little bit. Sometimes it's just this fear of it's so hard to hire. I mean, you hear this all the time. It's so hard to hire, so hard to hire.
Mhm.
So I always say, what are you doing to hire? And they're like, a couple years ago, we put a job posting on Indeed. I'm like, okay.
Met a lot of interesting humans that way.
Yeah, like they were all garbage, all garbage. I'm like, so that was still a couple of years ago. What are we doing today? Well, people, there's just no good people out there. I'm like, great. So then we have to build them. So we need to reorganize, have more entry-level roles, shift, scale, and then you can train people. Oh, well, there's no good people out there either. I'm like, well, then we should just sell our agency.
Yeah. I love, she is John Taffer.
Yeah.
There's no excuses with
I was
you.
gonna say Gordon Ramsay.
Kelly doesn't take any trash.
Well, because it's like your own BS. And unfortunately in insurance, we have renewable revenue, which you guys don't have in real estate, right? You have
Right.
some versions if you're renting out the properties or you have
Yep.
repeat customers, but not to the level we have here. So
Nope.
it doesn't in insurance, it like the hard market was the first time it got really hot really fast. For a lot of people, it's just a slow way, like drive out, right? Like I could keep making the same amount of money. It's just that it gets harder. So the friction points, the fighting, the annoyingness keeps getting louder and louder and louder, but I don't make any less money.
Yeah.
Kelly, what's your favorite part of your job? Or do you have an agency that you are like, that was it? Like this one, I went in and it just went, phew.
Oh, there's all sorts of those, but you know what I love? Our larger agency goes what's called two-year program. So I love at the beginning, they're kind of held hostage by their team. There's no processes. They don't have clarity on their data. Nobody's celebrating. Nobody's winning. To the end, where like who they thought was their best employee is now probably at the bottom half because we've helped them recruit and find the best people. The energy's different. The vibe is different. People are happy going to work. We're loving our customers. The processes have taken place. It's no longer new and choppy. And like the agency is hitting goals. Like I share, there's one agency that we have where I told them what we recommend a personalized sales goal to be if they were only selling. And they were like, what? That's impossible.
Yeah.
And we got the right people in, we did some recruiting from AAA, put them into the right seats and all of them are exceeding that goal. And I said, yeah, it is possible. So I love the aha moments. I love the moments where we stop running this community, like we're all going to be equals to there is going to be some hierarchy. And I know that might sound hard for people to understand, but for businesses to really grow, you need a leader, and there has to be someone calling the shots and having the performance and the accountability. So I love the end when they look at it like this was either this or selling. And now I see a long future that is going to be amazing. And I'm like, great, my job is done.
That's awesome.
I John Tapper it out.
That's
Yeah.
right. All right. So that brings us to your quote. The quote that you provided us was clarity is kind. So why was that the quote you chose?
Yes. Can I go back to the last question real quick?
Of course. Yeah.
One thing, just so there's one program that we have that's the hardest program that we do, which is our renewal review call program. So this is getting everybody in the agency to make an annual proactive renewal review out to every customer. Nobody thinks it can be done. But it 100%, it's people think of it as a service process, but if you do it, that's where you get your referrals, you get your coverage, your cross sells, your coverage increases. You improve the product so customers know the discounts. Like we're proactively working those accounts, right? And that just it solves every problem an agency has. Your remarketing drops, all these things happen. But nobody believes they can do it up front. And so it takes actually quite a lot of belief and exertion to get people into the rhythm of doing it. But I will say this, we had two very large agencies that are national agencies. The first one clocked in at 86% retention last July. By February, they were at 92%, which is massive. They had over 30,000 policy renewals a month.
Wow.
So they were calling out to that, not with VAs, not with AI, with straight, like, let's get it going.
It's like almost 500,000 over the, the year.
The other one that just we're about to finish it up, but they're about 5 months in. They've bumped up in 5 months, so not 9, but 5. So that will keep accelerating. 4 points. So like when I see those numbers at scale, not necessarily just in like your local retail shop, I say, it's worth it to throw bodies at it, right? It's worth it to go do it. You just, you can't just sit back. So those are the moments where it's like, it's so easy for me because I've seen it a million times, but to see it put into scale or is like, yeah.
Well, and two is you look at that bottom line. I mean, 1 point, 2 points is dramatic. You start getting into that territory on 30,000 a month. I mean, you're talking about big numbers.
I definitely paid for myself.
Oh yeah, a couple of times.
What it's all about.
Yeah. But then you forget the fact that like the other like offshoot stat on that was that one agency also ran a little mini contest on cross sells from the renewal calls. And they brought in another 112,000 in 3 weeks in revenue from cross selling.
Wow.
So, it's like, hey, all I had to do was like, where do you have your auto?
Right.
Like,
come on, Bev.
Yeah.
Ask them where their auto is.
One more question, Bev.
Hey, you have a pool.
Put down the
you
beer.
have an umbrella.
Ask the question.
Yeah, these are, by the way, I mean, the training's still new. They were only doing it for 6 months. So you can imagine like if they keep at it, the skill set that develops of overcoming those objections. So that, like, it's like shooting fish in a barrel, but getting agencies to understand the power of renewal review calls, they're always so hesitant to it. And
well, they're going in with one mindset, right? And it's part of your job is, it's like the psychiatrist or psychologist to kind of reformat, why are we doing these? And to be able to explain to them, well, if you're doing this, it's more revenue. We're making more revenue. You're making more money. You know what I mean? So I guess in a lot of ways, your training is certainly consulting, but there's this psychological aspect of it that comes with it.
But you got to get the agency owner not think that Bev's going to walk out because she's got to call her customers. But Bev gives such good service because she's going to tell you that I give great service.
Great service.
But what do you do? Do you call your customers at renewal? Oh, no, we don't have time for that.
Yeah.
There's a little, like, that's what I'm talking about. There's no definition of excellence, right?
Yeah.
We had one agency a couple of weeks ago that was like, we do a great job. We call customers back in 3 days. Like,
fantastic work.
Amazing.
It's all perspective,
It's all amazing. Yeah. It's like, what was it before?
Right. 3 weeks.
Yeah.
3 weeks, Kelly.
Yeah, but I diverged because I just had that in the back of my head. But the favorite quote that you were saying, I think you did the Brene Brown one. Is that right? The clarity is kind.
Yeah, clarity is kind. Yep.
Yeah. So There's another quote that I have that's like an offshoot of that, which someone once told me, which is the opposite of love is not hate, it's indifference. So,
Huh.
like in a marriage, if you almost stop arguing, it means you've given up and you're just like avoiding everything, right? Like it's not worth my energy to do this, which is actually the worst sign for any relationship, right? So, even if you take it into insurance or real estate, like if you have a team member that you just avoid, you don't want to talk to them. You're like, I'm just not even going to address them to fix it. I can't. That's actually the worst sign, right? Because you've stopped caring about that person's development or next steps or, almost like the rest of the team. So I always like to say the first step is we have to clarify, like, what are the role? What's your role? What's your responsibility? What are you going to be measured by? What's the process? What's the strategy? Once you clarify, that's kind. But then the second half of it, it's the kindest thing you could do is communicate to somebody if they're not meeting expectation. So I like to say, do you want to know if you have spinach in your teeth?
Right. I do.
Everyone says that, but like the minute somebody tells you, you get really kind of nervous and embarrassed.
How
right? Like,
long's it been there?
No,
like you didn't tell
I
me.
just start digging. Like, oh,
Yeah.
here, I got it right.
You're like,
here.
hey, let me see that phone real quick.
Yeah, but people get defensive, right?
Yes,
Like
exactly.
that's a normal
They
human.
feel like they're being
response.
judged.
So it's like, but it's also I try to tell people because in insurance, a lot of people are service people and they have a lot of feelings. Like service people have just a lot of feelings.
Yeah.
They're everywhere. Like they just can't control them. So when you come to a service person and you tell them that, I always like to say, hey, you're doing such a great job. I want to let you know this because I care about you, right? Because I care about your success. And I want to make sure that you understand clearly kind of where we're at and what needs to happen. And then just go a little bit better. So I just say clarity is kind. And in a lot of growing agencies, you're sort of winging it, working on chance, gut instinct, and your team needs clear direction. Like, what are we doing? Where are we going? What's the target? What's the goal? It can't change all the time. And you can't operate an agency like policy by client by client. Well, on this one, we do this. On this one, we do that. You'll never get to operational excellence.
Yeah. Well, that is such awesome advice. What a great conversation. And before we shut it down, Kelly, why don't you tell our watchers and listeners where they can learn more about you and everything you got going on with your business?
Yeah. So agencyperformancepartners.com. You can go to YouTube. We have thousands of videos out there now.
wow.
Or if you have any questions on insurance, go to our blog. We have over 1,000 blogs out there. We write blogs every week just on different challenges. So if you're searching, you can find it. Lots of people say we give so much away. You can get so many free resources on our website, but our job is to be the best friend to this industry. So if you want to reach out and learn more about how we can help your agency, happy to have that conversation. If you even want to just start by watching some of our videos or listen to our podcast, you can get a good vibe for what we do and how we operate. But don't be scared of the John Tapper comment.
Right.
He's always well liked at the end.
They love him.
Right. They do.
Turns out.
They all hug him at the end, right?
Yeah. They're also happy with their newly renovated bar.
Right.
Yeah.
Exactly. Awesome. Well, hey, we greatly appreciate you sharing your time with us today. And that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you next week. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.